Amazing. Well, it's so lovely to see you all. My name is Sagar. I am an ex-founder and investor and currently at Stripe. I've been with Stripe for 4 years, primarily based out of our office in Singapore, doing some country expansion, and moved back to London about 3 months ago to still work on investor partnerships. By way, as a brief background, I always find it's like a really annoying cliche when people say they like stumbled into tech, but I was really like doing human rights law and journalism before I realized that I guess like working in tech gives you the opportunity to have impact across like many different parameters and access to people. And so my first company was an audio news app. We were delivering the day's biggest stories to folks across an application. And we had, some signs of what I would describe as like product market fit. We had about 1 million downloads in the UK. We were kind of one of the most featured apps in the App Store, but we realized it really wasn't working. The user churn was really high. We weren't able to monetize. And so we shifted to a B2B model. That's when we moved out to the US, where we raised our seed round with folks from Lightspeed and other folks. But, a really interesting journey. So have got some experience from the founder side, doing, I guess, all sorts from fundraising, hiring, thinking about product and go to market, but not really particularly doing any of them particularly well. So hopefully some of the things that I'll be able to share are more kind of just, words of caution. But I then also spent time at Entrepreneur First, which I don't know if folks are super familiar, but it takes people before they have an idea, helps them to kind of find a co-founder. We then invest in their ideas. And so, yeah, as kind of described, I was part of our team that was setting up offices in both Berlin and Bangalore, and also, doing our internal investments. And again, I had the real pleasure of working with incredible founders, learning from them just from the sidelines, seeing what things they were doing really well, what things they were doing badly, and hoping to share some of that, with you today. And then, yeah, again, as I mentioned, I've been with Stripe now. I joined when we were about 1,500 people. We're now close to 7,000, which is still crazy to me, but it's been really cool, I guess, working with a lot of startups like you. So yeah, I guess I'm really open to however you want to do this, Em. I know you had some questions that you had.
Yeah. Wow, what a journey. I didn't know all of those different points. So let's start off about your startup. And so you mentioned you initially launched, stuff didn't work, and then you decided to pivot, move to the US and race to the US with the B2B model. How far along were you at that point? Like how many months in? Had you already raised a pre-seed round at that point? And then talk us through a little bit about why you decided to move out to the US. And actually the question's probably getting too long already, so we'll just start there.
Yeah, so we were quite far along down, right? Like, as I mentioned, we had a ton of, app downloads. Our, DAUs and MAUs was still, reasonably high. But I think we quickly lost conviction that this was going to be a viable path forward. And I guess like one thing that I always encourage founders to be, thinking about is like, is this the best use of my time? Like, I think each of us is ambitious in our own way. And you can often hear, I need to get like external validation from the company, from like investors. And obviously that is a very valuable like set of validation because it provides you with resources. But to me, I always think, is this the thing that's going to help me achieve the impact I want to see in the world? And yeah, at one point we were thinking, look, at this burn rate, with this model, we can't really see there being a viable path to success. And we had raised around 500K from angels and a very small Australian fund. There is another weird backstory behind that I'll tell you about another time. But it really, the opportunity presented itself because we joined the Techstars program out in SF. And again, I think moving to the US, it's not for everyone. I actually moved back to London because it wasn't really right for me. But I think it really opened my eyes to like the scale that you should sometimes like strive for. And what we realized was that perhaps what we could do is, rather than just delivering the content, was becoming an infrastructure layer, allowing other businesses to kind of do what we were doing at scale. And so it was definitely really tough. We had to let go a lot of the team as we like totally rebuilt a new product. But it was, I think the right thing to do. We did really, have a lot of success. We partnered with some of the biggest like media brands across like Europe and the US. But yeah, I think it's never easy to kind of make these calls, and we really relied heavily on like some of our friends, that founder friends that were going through similar things, from some of our advisors. So yeah.
At what point did you raise from the US investors? Had you already had like a successful pivot or some proof of traction with the B2B pivot, or were you raising like on the vision of this pivot?
So funnily, we raised on the product that we previously building. But really the investors were quite basically was saying to us after we made the pivot that we always wanted you to go to this direction, which I don't know if that's just like a convenient thing, but I do think, they always pushed us on like, is this the right thing for you folks to be focusing on? And so, yeah, we kind of, I don't know, I wouldn't even describe it as like a big US raise, in that, we did end up going with some of the bigger names, but initially it was kind of textiles that were like, hey, look, this is just like a new kind of chance for you to like extend runway, to like build a bit of just like take the company in potentially a different direction. Because we had thought about some ways that technology could make our services more scalable, even if we didn't pivot to a B2B model.
Okay. And then what happened? When did you decide to move away from it?
So we had decided to move away as we were kind of getting close to our like raising our Series A round. We had like a very, very, very competent team. Like the way that our technology was constructed was we use a lot of like natural language processing and speech recognition, so things that are quite in vogue today. So we knew that we had a really great team, and then I think a few things really catalyzed the decision for us to kind of shut things down. One is that my co-founder and I were still incredibly close, but we had very different visions about what we wanted the product to look like and how we wanted to build it. I think, I've seen really firsthand at EF, like the importance of being really upfront with like, what kind of business are you actually trying to build? And in your early stages, it can be really easy when things are successful to say, yeah, of course, we want to build this like billion-dollar business. We want to be like having offices in the US and London. But sometimes, definitely you're going to have like really, really rough periods in which nothing's working. Your team is kind of upset, or loads of things, and your family is like halfway across the world. And so I think me and my co-founder had like different perspectives. And then we also kind of, it's not easy, right, to just like go and raise a Series A round. I think still at, I know many of you are at pre-seed, you're still going to be raising on a vision, and whilst at seed they want to see a little bit more, at Series A, that you kind of have to be showing some signs of product market fit when you're just applying capital to help you capture like more market share. And I think, realistically, we just weren't in a good place to be able to do that. And so, very fortunately, we were able to transition a lot of our team to the Google Media Lab, where we basically went in for about 6 months, tried to build a very similar product that we didn't end up shipping. So, I definitely think it was the right thing. Of course, it's hard. Of course, like you're always going to have, well, at least I always have regrets of like, did we time it a little bit wrong? Like, what would this product look like today? And like, what if we did this thing differently? But I still think it was the right thing to do.
Before we move on to EF, I'm curious to know, like, what was it like selling into larger media outlets? How did you like break into, or I guess like what was that sales cycle like? How did you like, get into conversations with that? And then how do you go about pricing to a large media corporation?
Yeah. The short answer is it was, again, like we were first time founders. Like I literally did history at university. I have no real like actual skills in business or anything. So everything was just like, how do we learn like extremely quickly? And we didn't have like a perfect strategy. We didn't even have a strategy, right? It was like, who do we know that can introduce us to people that might be able to help? And so a lot of it was like, who do we have in our extended network that might be able to help us to be introduced to? And yeah, honestly, we were quite shameless in just like asking anyone that we'd even like vaguely met at university of like, hey, I see that you're connected with this person. We're trying to get connected in with like this team. That helped get us to a place. And then whenever we were having conversations with folks, again, like asking for like 2 or 3 referrals and introductions. And people, I think, want to be helpful. And so yeah, people were really happy to do that. When it came to the actual sale, again, we did a lot of things very poorly. As an early stage business, particularly what we were trying to develop, which was an embeddable SDK like player that they would surface to a lot of their users. Everything was around like setting up a good pilot. And we always used to think about how do we just get our foot in the door. And so like, for instance, we had a contract with the BBC where they paid us £20,000, which at the time we were like, this is so amazing. We really like cracked it, but for 6 months. But we weren't clear. We did like a lot of things wrong. One is that we didn't work with the right stakeholder. We worked with like the innovation team, which is like, cool, we're happy to like support new ideas, but they don't actually embed you within the organization. So I think always think about who you're right, making sure you get the right stakeholder is. And the second thing is we didn't have a good way of tracking what a success metric looked like. So we got to the end of the 6 months. They did extend it for a little bit longer, but it didn't become clear that this would turn into a longer contract. And so again, there's lots of things that I would do differently, but this is why I kind of counsel folks to think a little bit about in your early stages, like when you're setting up some of these kind of pilots, make sure they're set up for like long-term success. And then when it comes to pricing, again, like that 20K, we really just plucked it out of the air because it was like, that's pretty much how much we can charge to like avoid going through this extended sales cycle. I always kind of counsel folks now to think about, I don't know if folks have seen there's something called the price sensitivity meter, but it's broadly this kind of asking your users like, what's a price that's so low you wouldn't consider it? What's a price that feels like a bargain? What's a price that is doable but requires a bit of thinking? But eventually you'll sign it because of the quality of the product. And then what's a price that is so high that you wouldn't consider it? Obviously, people tend to just ignore like 1 and 2, but people always try and be a bargain in the early stages. Again, you'll be able to like land on what your specific price point is. But I would always encourage you not to try and be this like bargain product in your early stages. Like the reasons why is that your early adopters are so critical towards like what you're going to build. Like Stripe, for instance, had Shopify as one of our like first users. And they pulled us into so many incredible directions, right? Like our card issuing, our treasuries, our bank accounts, because our biggest user has kind of pulled us into like those directions. But if hypothetically we had listened to the wrong early adopters, we could have had a very different product. And so who you allow to use your product and whose opinions that you take into account at the early stages is so critical. And so I know this is a little bit of a rambling answer, but hopefully that gives a little bit of perspective of things like pricing. And yeah, again, like I have a lot of opinions around pricing. I think just always try and push your prices up. You're probably undercharging. But yeah, if anyone's keen, I have some other materials I can kind of ping around.
It's so tempting to try to enter the market to be the cheapest because, especially when you're early on, you don't have that much overhead. So it feels like an easy competitive advantage to win. Yeah. But trying to compete on price is kind of can be a race to the bottom a bit, especially if you have well-funded competitors who can afford to lose a bit of cash to beat you in that category. And then you're in trouble at that point. I love what you said about not having the clear KPIs to make it clear to BBC that, the contract was delivering the value that would have led to a longer term contract. So maybe it's difficult to do in retrospect, but like, what sort of advice do you have for founders in structuring those deals? What are useful KPIs that can help you set yourself up for success for those longer term contracts?
Yeah. Well, again, I think that this is always like very dependent on what your customer kind of what value that you're adding for your customer is. But I think put simply, this is obviously a little bit different, perhaps if you're on the B2C side, but from a B2B side, like why is someone going to purchase your product? A, do you help them increase their top line? So you're helping them to increase revenues? Do you help them make more money? Or is it something around like helping them to be more profitable? So you save them money. It's like one could be, well, we hypothetically increase the effectiveness of our sales reps such that they bring in like 2 times amount more pipeline per quarter than before. Another could be, well, with our product, you can have a much smaller like sales team. Again, I would think about like what are those things that your product actually delivers, and then make sure you're having a conversation with your customer around they should be aware of that, right? Like it's all well and good being like, we think that this delivers this value for them, but your customer might see something very different. Again, like one of the things that we always try to push people at, we do this at Stripe even, but we kind of use this like heuristic of like the CFO test, which is like, if we were to put ourselves in the shoes of someone that's requesting, purchase of a software, like why are they going to actually like request it? Right? Is it going to be, look, this is going to improve the efficiency of our like finance team by X amount. This is the dollar saving that we anticipate. Again, I would think about just making sure you're really tied with that metric. And just it is a conversation, but I think the conversation with all these like pilots, partnerships should be extremely clear after the amount of time of this pilot, and give yourself enough time with the pilot. Don't just say it's going to be 3 months and we don't need anything from you. Be really like honest that it needs to be 12 months. You need to give us this engineering time. You need to give us access to like this data. And after that, if we hit this number for you, that would represent meaningful success for your business. And it would convert to a contract under these vague terms. Again, you're striking a balance between like not scaring folks of like what the obligations might be, but you're also kind of not having any surprises at the end of that 12 months. Does that make sense?
Yeah, that's really good. And founders, just a reminder, we're going to have Q&A shortly. And I know a lot of people are going through pricing battles at the moment. So please put your questions in the chat, or prepare to raise your hand and you can ask the question live. But okay, let's move on to EF. I know you invested in around 50 startups while you were there. So where's a good place to start? What did you learn actually about like what sort of traits and founders did you see that got you really excited, and what were you looking at to assess those traits?
Yeah. I think this is actually really relevant because at the seed stage, it's still primarily about the team. Of course, people always talk about like the 3 T's of like team, TAM, and traction, but team is going to be like the most critical thing for you. And I guess, there's like 2 things that really come to mind that I would always look for. Like one is confidence, which sounds a bit weird and it can be a bit of pejorative, but it's more, I would love when the founder knows exactly like why they are taking the decisions that they are taking. And that could be, look, we know from either my background working in this space or from the things that I have learned within this short trajectory, like this is the right customer segment to go after. These are like the baseline product features. And it doesn't mean that you're arrogant, but like, I want to know as a founder that you've thought about every possible eventuality and you've settled on your startup, because it's the only way that this can be successful. And so confidence from like, we know what we're talking about, and confidence can be like demonstrated in saying, like, I don't know about this thing, again, one of the things that I always think about that the folks did really well at EF was having one thing that they believed to be true. And it could say the only thing that I feel confident about is that there is a huge market need for this. Again, like I look at some of the companies that I worked with, people working in like insurance, spaces that we didn't really know about. The main takeaway was like, I don't know what this product's going to look like necessarily, have some vague hypotheses that I'm going to be able to test and some early signs that I'm on the right track. But the only thing I could like bet my proverbial house on is that there is this big underserved market need, or there is a technology that I think is underserved. And again, having that confidence, I think is very valuable. And then I think the other thing is just like toughness and resilience. Again, it really goes without saying, but fundraising, every part about a startup is hard. Like there's never going to be a time that I think it's easy. Like I see like John and Patrick were in the office recently, and founders of Stripe, and you'd think that perhaps when you're a big billion-dollar business, like it feels easy, but it's not. And there's always going to be challenges, and we need to be able to see like resilience. We need to be able to know that you will be able to figure these things out, because at the end of the day, no one else is really going to be able to help you. Like I always actually even, sorry, a little bit of a digression, but the companies that worked best at EF, ones where we didn't actually get involved very much. We just gave them space, they just ran. And you always want that, because no one else is as incentivized to kind of spend time. And so you shouldn't, those two things I think are really important, like confidence, like resilience in terms of like personality traits.
I love what you said, like, what's the one thing you're willing to like bet your house on? Like what's the one thing that you know to be true? Founders, if you have an idea for what that is for you and for your startup, put it in the chat, because we're going to ask you that on the weekly update at the end of the week. I think that's a really, really great lens too.
Again, I think, sorry, one of the things that I know you'd pinged before was just like what some of the different mindsets that you have as an investor versus a founder. And on that point particularly, when I was a founder, I used to think everything about, I want to be getting like 7 out of 10 across every different parameter. Let's say it's like the market, let's say it's the team, let's say it's the product. I want to basically not have any red flags and be okay at all of these things, have an answer to all of these things. But actually, as an investor, the only thing you care about is you want folks to be like 10 out of 10 about like 2 things, and they can be like 1 out of 10 about those other things, but the 2 things that you think they're 10 out of 10 on are the most important things for the business at that period of time. Like, again, an example is like a lot of investors might ask about like defensibility. Like what happens when other people see what you're working on and want to just copy you? Again, like that is going to be important, but it's okay to sometimes say, look, I don't know what's going to happen if Google decide to just go and invest very heavily in this space. I don't think that they're focused on it right now, given like a very cursory like sense of what trajectory that their product is taking. But I just don't know. What I do know for sure is that people love our product. We have 3 people that are like obsessed with it. They're using it every day, or 2 businesses that are like, they would be so sad if this didn't exist and are happy to pay. So sorry, that was just one thing I might add a little bit on that.
Yeah, that's helpful. And that question always gets asked, like, what happens if, Google does it? What happens if Facebook does it? What happens if Amazon starts selling it? So if everyone be prepared to answer that question. And I also feel like it's hard to have an actual response to that is going to satisfy investors who are genuinely concerned about that, because it's always a possibility. And when you're an early stage startup, maybe you're competing with, brand, but as you said, it's really good. Like you can just focus on the engagement that you already have or what is already known.
Yeah. And again, like I think it comes back to, this is your time. Like you as a founder are giving up all of the other things that you could be doing. You could be giving up high paid jobs. If you like, sometimes with these questions, it's like, what is the investor trying to get me to think about? Because like sometimes it's useful, but like if you yourself are not worried about like a big incumbent going to build this because there's nothing in their roadmap about it that is talking about it, or you have done some initial scoping, then you should feel confident just saying, look, I don't think this is like the thing that's going to kill the company in the next like 24, like 36 months. Again, it comes back to that confidence. Like as an investor, you want confidence that this founder has thought of everything, doesn't mean that they've like mitigated against that risk, but there are like hundreds of like fires that are burning. You just need to pick the ones that are like most likely to, I don't know why I keep making house references, but like possibly like burn the house down.
That's really useful. And I love seeing, we've had a few people put their, one sentence in the chat. That's great. Keep them coming. Okay. And we are going to ask a few more questions and then we'll move to Q&A. Following investment from EF, how did you see founders, or like what were the biggest mistakes that you saw founders make after they received their initial capital?
Yeah, I mean, on this, I think my general principle is that, and again, you'll always hear this, but like, the fundraising like shouldn't be a goal. Like it should just be like, cool, I've like done fundraising now, like woo. Obviously, it's nice to like congratulate yourself on like achieving a milestone, but you should only be fundraising when it really is helping you to accelerate something that's already theoretically working. And again, you should be like not expecting anyone to tell you what you should be working on. Again, it comes back to like no one really is going to help you and like tell you what to do. Like you are the founders, you are like owning what this company looks like and the trajectory that it's going on. Again, like maybe to make it a little bit more concrete, one is getting distracted. Like things that you should avoid doing is like getting distracted around like what you should be focusing on. We always recommend having like one North Star metric, and just growing that consistently. I know that like YC always say like double-digit growth weekly. Of course, that can be really hard if you have a more complex product that's going to take some time to be built. But just ask yourself. I know Peter Thiel always talks about like the one thing, but like what is the one metric that really represents like good for you? At Stripe, even now we still have it. Right? We're a really big business, but we still talk about like what is the processing volume that we have, and how do we just increase that like quarter over quarter, like year over year. And so, yeah, that's kind of one of the things that I would encourage you to keep thinking about and keep it simple. Other things that we think people kind of got in a little bit of an issue with post some investment is, even though the investment EF is reasonably small, you do have like some latitude to go and build like different types of products and like perhaps build like for new types of segments. It's always encouraged at this stage to be like laser focused on like one really niche customer segment and like solve for one problem. Don't necessarily like build many different products to try and like capture different segments. Like that doesn't look good for your seed investors. Like if you think that like most of your revenues are at some point going to come in the enterprise space, but right now you're in mid-market, just giving a nod to, hey, there's potentially some opportunity there, we're going to explore it a little bit more at this possible stage. That's valuable, but I wouldn't get distracted and actually start like building those things. The last kind of thing, just around like things to avoid is it's really hard to know like when a founder should stop being responsible for delivering all of the outputs of the business, particularly like pre-seed. And you're probably still going to have to do this, but as an investor, we want to start to see signs that you are a leader of this business, and that means going and bringing on the best possible team. And so I would try to sometimes avoid this temptation of, well, we don't have very much money, we just need to build everything. You should be thinking about how do I get people, the smartest people that I know, to like come and work on this product for free, or like, with equity and like minimal. That is such a powerful signal to an investor, because again, like, people don't give up their time lightly. Like, everyone that's ambitious only wants to join a company that they think be extremely attractive from like a returns perspective. And so if you're able to go out and build that team and like make it, it's just something not to neglect, I think, post raising any types of capital. So yeah, I'm sorry, I guess the last thing I would just think about is just like, don't, ideally, even once you have your pre-seed, try and get to some form of like revenue. Like, again, like YC will talk about like ramen profitable. Like, what can you get to that means you don't desperately need the like VC money? Like, I sometimes get intros from folks being like, we have 3 months left of runway and we're going to die if we don't. Again, it can happen, of course, but like, try and be in this position where you can keep yourself like ticking over.
Yeah. Gosh, that's all. We could do an entire session like on those 3-4 points that you just mentioned. I want to, Rob, we're going to go to your question shortly. But the last point I want to touch on is what you just talked about with the North Star metric. So all the founders in our program at the start choose the North Star metric that they want to focus on and report on every single week for the duration of the program. And so especially in the first week, founders are thinking about, what should my North Star metric be? What are different ones that you've seen different types of startup use? Like revenue is obviously a common one. We hear mixed stuff from investors, whether or not they like seeing founders focus on revenue, or whether that's like a lagging indicator and whether they should choose something earlier. What's your take? What have you seen work, and like what sort of stuff can be a distraction?
Yeah. Okay, it sounds like a bit of a divergence, but I think the best advice I received as a founder is like, you're going to hear so much advice from like lots of different people. I think good advice is either like extremely broad, and that could apply to any startup, or extremely specific, where it applies to like the specific thing that you're building on. And so in the spirit of being extremely broad, I think the only metric that I think I would kind of encourage you to think about is just, what does growth look like? And growth / traction. And as long as you're not picking an obviously like vanity metric, I think you should be the custodian of deciding what does good look like for your business. And again, like, it kind of comes back to like, you own the narrative. Like, you don't want this situation in which a VC is coming and saying, well, like, the most important thing for you to be thinking about is like user retention. Like, you need to say, oh, I've thought of that. Like, I know what the 5 most common metrics are within my space. This is the one that I'm focused on, and like, this is why. And you're right. Like, I think revenue doesn't necessarily mean everything. Like, I would sometimes like to have, and I do some like, very small like angel rounds. Like, I would sometimes like to see people have a small number of non-paying users, but that they're using the product a lot, and they've committed things that are like non-monetary. Again, like, at EF, we had a lot of like deep tech companies. Like, the biggest thing that you can go and get when you're selling to like governments or enterprises is just like their time and their engineering resource and their commitment to like usage. And obviously, if you can give some inclination of like their willingness to pay, great. And again, obviously, the way that the investment landscape is shifting is towards like, how do you bring some of that forward? And would definitely encourage you to think about that. But yeah, revenue is not the necessarily like the only metric to show that you have something that people want, which is fundamentally the thing that people care about. And again, growth and traction give people more evidence that you're building something that people want. If more people are using something week on week and it's growing at a good enough pace, that's signs that people want something that you have.
Great, thank you. Okay, I hope that gave everyone more ideas on what to focus on for the North Star metric. And if you guys have any questions on it too, this is a good time to ask
it. So any last thing I'll just add is like,
Yeah.
again, like talk to founders, advisors in your space, like who are folks that are like 1 or 2 stages ahead of you. Like, what are they focused on? That will give you a good inkling of like making sure you're not like going wildly off piece. But I doubt that you will be. And like, yeah.
So was that like ask founders who are 1 or 2 phases ahead of you, or just like think
Yeah.
about what you would be thinking about if you were 2 steps ahead?
I would even ask founders. Like, we kind of found like the 4 people that were operating in like in our space, and like, you know, perhaps like they're not always willing to share, but I often actually think people are quite happy to kind of just share like what were they tracking, is that what, you know, their investors are kind of happy with, and does that just represent what good looks like for the business?
Great. Okay, Rob, you are up first.
Thanks for that. Yeah, really, really enjoyed that session. Super insightful, especially that end bit about revenue versus engagement, because that's exactly a problem I'm facing. But that wasn't necessarily my question. It was just to go back to the point you made about being laser focused on the product side. We completely buy into that. What about revenue streams? Some of the feedback that I've had, like I'm building out predominantly B2C with definitely an option to go B2B2C and potentially B2B. So there's numerous revenue streams, and I've had feedback just to purely focus on the consumer. What's your view on that?
Yeah, I think it's a really good question. I guess the thing that I always stress is like you should have a point of view or hypothesis around like how big the opportunity is. And so if you think that look, the majority of our revenues are going to come from the B2C side, I would, you know, really focus on that. On the B2B side, if you think, hey, this is a huge pool, but currently it's unaddressable until we build some velocity on the B2B side, you again, like you'll probably have like the best like convictions around that. And I think what you might just want to do is say, we've experimented. So this is what our back of the envelope calculations look like. So if we went for a B2B model, it would dramatically increase our distribution, but we would have a rev share and there would be all these other associated costs, which might like eat into our margin. You could then just hypothetically say, look, that's something that to get it off the ground requires like 1 or 2 people. So even though we're excited about that opportunity, it's just not something that we want to focus on like right now. So
yes,
I think just having a point of view, doing some like back of the envelope like calculations and showing like, cool, there could be this pot. And yeah, the only other thing that I think I would just like to share is, I know it sounds a bit silly, but sometimes I think to make investors feel a little bit more comfortable, it's just showing them like what comparable businesses that are later on are doing. So like, you could just say, look, there is this, I don't know, like Series D company, and like most of their revenues actually do come from the B2C side still, even after they invested a ton on their B2B. Or maybe it's the opposite. And maybe it's just like, we see our trajectory as being like this on the monetization.
Yeah, that's really helpful. Thank you. Appreciate that.
Thank you.
All right. Marco, you're up.
Hi, Sagar. A really good session. Thank you very much. I got intrigued by your experience at EF, and it, in a sense that it pertains. You mentioned that you have their entrepreneurs that, you know, entrepreneur first, essentially. Yeah, they don't have the idea yet. They don't know yet what they want to do, but you know they're looking for something. Essentially, then you find co-founders, right? Now, I already have an idea, and I already have a product. Really, yeah. I mean, POC level, but you know, it's there. But I'm a technical guy and I want a co-founder, okay, on a business side of things, right? And an entrepreneur, right? So how would you go, like, given that you have this experience of matching people, if you were in my position, how would you go about it? Like, how would you approach this problem? Because it's really difficult. I mean, I've tried several times through different channels. And it's very, very hard to, you know, I don't know where to start really.
Yeah. This is such a great question. And honestly, I had this like when I was a founder. Me and my co-founders are both like business folk. I say business in inverted commas, but
Yes.
people. And we were looking for a technical person. And again, like it's really, really hard to figure out like what it is. How do you find someone? What should you be looking for? I think like a top line, what I would suggest for you is like you have like two options. I guess one is like finding someone with like deep domain expertise. And so like let's say that you're working in like telecoms. It could be someone that's been at like BT for 15 years. And like that's valuable because they know the problems that your users might be facing. They have an existing Rolodex of like customers that they can go and like sell to, and they can be kind of good outward facing folks for the company. Again, that's really relevant where you think having that domain insight would be a meaningful advantage for the company. The other thing that you could look for is someone with a more generalist set of skills, but has extremely high agency and can make things happen.
Yeah.
These can be harder to look for, and by no means is this like a credentialist take, but like what are some places that you think extremely high agency, smart people work? And like what kind of roles have they demonstrated some of the skills that would make them good? So could it be like a PM, like someone that's led big products at like Google or like some of these companies where, again, I don't want to like share specific places, but some of those people that could be, generalists. And so just, I know that this might not be relevant for everyone, so I'm really happy to chat about it more, but this is honestly like one of the highest leverage things and highest impact things that you can do is to bring on an incredible co-founder. Like it would totally like change the trajectory of your business because, and so you should spend a lot of time on this. And like that requires like writing hit lists, going to meet people and having an extremely good like sales pitch about like why someone should work on your business, because they're going to effectively have no salary for a really long time. They're just going to be on equity. And so, yeah, that's one, is you need to be like outbounding folks, but then I'd also try and like reach out to any of your networks, advisors like VCs, and see if they might be able to connect you up.
And it like somebody like EF, for example, did.
Hey, Marcus, sorry, I'm going to jump in because we have a lot of questions that I want to get through.
Oh, okay.
Sorry. But your second
I'll connect later. Yeah. Thank you. Thank you.
Yeah.
Thanks.
Bye.
Stamina, I'm going to go to you, and then Anthony, I'll take a question in the chat.
Thank you very much. Thank you, Margaret. And thank you, Sagar. Very interesting discussion. I am returning back to what you mentioned a little bit earlier about the metrics of what the investors are looking for. If you allow me, I will share our experience. We are second time now into our second fundraising. So I can share of what we experienced the first time, and I hope the group will benefit from our experience. Refillable is a sustainable retailer. So we're in the retail, grocery retail space. So what we've noticed in the very beginning was we've grouped our investors by psychological profile. So some of our investors were interested to invest because of the sustainability angle, and some of our investors were interested to invest because of the bottom line. What we presented to both of our groups of investors was the matrix, but translated from a different angle. What we're aiming to achieve here is obviously raise capital. That was our first round, raise capital to take the business further. But the points that were important to the sustainable group were, how do we participate to make a difference in the environment? And we went with specific numbers and figures. Refillable is already in our third year of operations. We're accelerating massively right now. So we're going for our second fundraise to open our second shop. With the second group of investors, which were interested mainly in the bottom line, we presented obviously revenue, we presented growth of customer base, we presented traction in terms of transactions, in terms of profit margins. So that resonated massively to that particular group. And then when we merged together both groups, we found common ground where they can see something resonated specifically to them. But in general, what all investors are looking for from our experience, to see that the industry has potential to grow, and grocery retail in UK is over 215 billion pounds industry.
Hey, sorry,
So,
I'm gonna jump in just because you have a lot of questions. Can we wrap up your question in like 10, 15 seconds?
it wasn't so much a question, it was more shared experience, building on what Sagar said, what the investors are looking for. So that was just sharing our experience of what could potentially be beneficial for those that are raising for the very first time.
I think that's really useful, the different value propositions for the different types of
Correct.
investors.
Correct.
Thanks.
Yeah, super cool. Yeah, and I think you'll all learn from each other, so do continue sharing these things.
Yeah, thank you. All right, Anthony, I'm going to take your question, and then Lokesha, I'm probably butchering your name, so correct me when we jump to you, but we'll go to you in a moment. Okay, Anthony is asking, can you talk about your role and remit at Stripe? And I'm going to go out on a limb here and say, so Anthony's a founder of a fintech company, so he's probably wondering if you're the best point of contact for a question he might have. That's my guess, Anthony. If that's not it, correct me.
Well, yeah, Anthony, I mean, really happy to.
Sorry, just a little bit of context. Hey, Sagar, great session. Thank you so much. We're already partnered with Stripe, so already, and I met Robert and a bunch of people. I'm just interested specifically as an investment partnership. What exactly is your role in remit?
Amazing. Yeah, so we work with VCs to try and make sure that we help their portfolio. We support any of their needs with a view to being more present within the startup ecosystem and learning about investment trends and sharing that back within the Stripe kind of product lens. So we kind of see ourselves as like the voice for startups and sharing, hey, we need to like prioritize this for our roadmap. We need to like deprioritize this. This is where we're doing well. This is where we're doing badly. So it's a bit of like an execution focused role, but then like some kind of tactical, like strategic elements. It's good fun. If we're ever hiring, I'd recommend it.
Sounds really interesting. I'll reach out. We can chat more.
Yeah, please do. Yeah, please do. And I think that applies to anyone. If anyone wants to chat about like Stripe related things, like please do ping my email across, and I'd be really happy to kind of chat.
Great, we'll share it with the cohort afterwards. Lokesh, you're up.
Thanks, So, Sagar, thanks for your like valuable insights. It was helpful. So my question is, like, we are into the fintech space. So especially when you operate in the fintech space, it becomes industry agnostic, right? Because finance function remains pretty much same for all the industry vertical. So I would like to understand from the founder standpoint, when we go pitch to a founder, when we say, hey, our product is industry agnostic and we can cater to the invoice automation pain point for the finance function, would the founder feel that we are trying to run behind multiple things at the same time? Or from the target market perspective, if we say, hey, we are going to focus on in this industry vertical first and then slowly scale it. So what would be the right approach when we go talk to investors on this particular point, Sagar?
Sorry, are you talking about it from, it's investors, right? It's not talking to customers.
Yeah, from the investor standpoint. Yeah.
Yeah. I think personally, I think they should be comfortable if you say, look, it is a horizontal like play, like we provide this to many different types of businesses. I guess, again, I would be surprised if they were not like super educated on this, but what you can just do to make sure they don't think that you're very kind of diffuse is just say, look, there are certain industries in which like we're not going to touch because maybe the finance teams look a little bit different. Like maybe it's the government sector that we're not touching. It's kind of banking. It's kind of like companies that are between this and size, because I guess what they just probably are worried that you could end up building too many features for companies that don't really need what you're working on. So I think, again, if you're hearing something different, then I think it's good to just like take that feedback on about how can you be clearer for like, no, we have like a very set product. It applies to many different, we are basically selling it to the same people. The fact that one is in like accountancy when one is in law is not salient. Mm-hmm. Does that make sense?
Yeah.
Right. I'm going to take a question from the chat, then Noel will go to you. Jolie says, super useful as we've heard different feedback, and sometimes we feel like we're going off track. Important to listen to customers and users first and be confident. We're applying to tech stars. Do you think we should apply for different cohorts if we're flexible with location? Also, have they helped with US market development?
Again, I did this a long time ago. So I was probably founding in 2014. So the program's probably changed. Like, I'm really happy to reach out to one of my internal colleagues that works with the Techstars team. And I know some other folks in London, if that's where anyone is. Broadly, I think there are going to be lots of different opportunities. You think about like what makes most sense for your business. If you do need to move, then great. But that is a kind of not a trapdoor decision, but it's something that you should be like putting a fair bit of consideration into. And I'm happy to chat and discuss further.
No, you're up.
Thanks, Margaret. Make sure hi, Sagar. I'll keep this in less than 90 seconds. So, Sagar, thank you for your presentation. It's great. Just to give some context, I'm a non-tech founder, and I run my own manufacturing business. And for my own business pain point, I partnered with this tech guy in Ireland to build an algorithm that helps business owners spend less time in protecting their profit margin. Our vision was to target the SMEs, which is really where my background is. There's two questions that I have is, now that we're in version 1, nearly into version 2 of our product, and we want to start charging, is the question of pricing. I mean, pricing is a big problem because we don't know what to charge, and we don't know what our customers are willing to bear. So my question is that by charging and measuring the impact for our customers, and then looking to reprice upwards, is this an approach we could take? So that's my first question, and I'll quickly jump to my second question. We are focusing on the SMEs, but we've also, just through word of mouth, have got introduced to a number of enterprise customers that we weren't prepared to deal with, but given that they are engaging with us, we just don't know yet where we're going to get the better traction. So we're helping both cohorts for the first and second versions. I mean, we're finding obviously SMEs have faster engagement because we're talking to decision makers. Enterprise, we have to wait for a lot of people to come into the room. But as a pre-revenue company, we are just not ready to decide. And if we put all our efforts, we don't know yet whether we should put all our efforts to either SME or enterprise. Our challenge is actually articulating.
We only got a few minutes left, so I'm gonna jump in, wrap it up.
Our challenge is articulating this to the investors, and that's really it.
Yeah. On pricing, I think I kind of mentioned it earlier, but what is the value that you're creating? What is your best hypothesis around like how much dollars that you're saving or helping them to make? Mm-hmm. A really rough heuristic is like try and capture 20% of that value, between 10 and 20%, given like the market dynamics. If you want to spend a little bit more time thinking about it, you might just want to consider how much is your competition charging, how much they're paying to solve this problem right now, and then making sure you're factoring in how much it costs you to actually deliver this service. So that's kind of just thinking a little bit about the pricing. And yeah, the main takeaway is always you should be experimenting. Like with cohorts, you should always be trying to increase it like by 5%. You have the flexibility and agility at your stage. The second thing is when you're thinking about different segments, again, this is why like startups are hard. There's no really easy answer to this. I think it just comes to like, what is the opportunity size that you see? Is it that you think, well, enterprise is huge, it's amazing, but like right now we don't have enough signals that we're going to be able to win in this space. And therefore, what we're going to try and do is just continue building this SMB product where we have some traction, but we put on the enterprise as a roadmap. And again, maybe you'd say we're going to commit like 1% of our time to still exploring this enterprise opportunities. And what you can then go and do is say, it's just not a focus for us right now, or even within that 1% of time, we've got a soft commit from a big enterprise.
All right, Darren, we're gonna end with your question. Tom, I saw that you had your hand raised for a bit too. If you still have a question, put it in the chat and we can try to get to that real quick too. Okay, Darren, you're up.
Yeah, thanks, Margaret. Sagar, fantastic to hear you speak. It's just really insightful and informative. Thank you so much. We're a sort of bootstrap startup. We've just gone through pre-seed. Unlike what you mentioned earlier about having a North Star, we've got 3 pillars. It's almost 3 business units under the umbrella of our brand. Mm-hmm. quick question in that, yesterday we had a non-exec meeting, it's got some fantastic non-execs on board. We're being sort of push-pulled. Half the exec team are kind of wanting us to go enterprise and half are wanting us to go consumer. Now, clearly we've just gone through the pre-seed, which closes on Friday. What, in your experience, who should I listen to? I mean, I've got to make the ultimate decision.
Yeah.
But it's a kind of mixed bag at the moment.
Yeah, again, it's really hard. I always think with these decisions, like, who are the people that could help guide you? Like, one is going to be like your instinct. I think that's really important as a founder. And but, you know, like, what is the opportunity sizing? Like, where do you see like the bigger piece of the pie? And then where do you have a right to win? Like, if hypothetically they're pushing you because hypothetically you worked in enterprise for 20 years, maybe it's like, okay, well, I could go and explore that. So I think, yeah, where do you have the right to win? That's important to think about. And then I would just also think, like, outside of your board, like, who are some like mentors that you could like bring on? These could just be, you know, people who have operated in your industry for a really long time. This could be like other founders that are operating in the same space. And yeah, like sadly, these are kind of the really tough decisions you have to make as like a founder. But try and just make it like optimized for like speed of decision making, but try and make sure, you know, you just have some method of capturing every reason. Like, keep asking them why. Like, if you disagree with it, like, because the worst thing is just you haven't taken into account something that could have been really valuable for the business. So if you flush out all of the information and you can say that this is a decision I'm going to make with the information I have right now, it might not be perfect. We might want to revisit it, but we're not going to revisit it for the next 12 months. I think really that's useful. About as good as you can do as a founder.
Yeah, we are a Stripe partner as well, by the way. So
nice. Oh, I'm glad.
Sagar, sorry, do you have time for one more quick question?
Sure, yeah.
Okay, great, thanks. Tom, do you want to ask it live?
Sure. Yeah, just one of your comments earlier around pilots and making sure you have the right stakeholder involved. For our service, we help customers pay their bills. We notice that we appeal to different parts of the business, from heads of customer support, heads of collections, heads of risk. Any advice on how to navigate that? Because every department is interested, but I'm wary that is a risk.
Yeah. Again, like with another business that I was part of, we had a similar kind of problem. I don't think there's like an easy answer. I think for your own, okay, yeah, I guess we kind of even have this at Stripe. Like, we sell to like CFOs and developers. I guess in the early stages, I would try and be a little bit more opinionated around if there are like a lot of people that you could be going after, which is the one that you think could move fastest or has like the biggest appetite and ability to kind of enter into like a long-term relationship. And just like using that as a bit of like a filtering mechanism, and just say, look, the majority of our time is going to be crafting a narrative around like customer sales teams or customer support. And like, you know, 80% of our time is towards like the customer service, and 20% is going to be with these other teams. And like, you might just want to course correct that over time. Maybe you'll say, like, it's not landing as we kind of explore that a bit further. But yeah, it's again like one of these like hard things, and not sure if I have like perfect answers, sadly.
No problem. Thanks very much.
We're going to wrap it there. Founders, even if you can't stick around for the 12 o'clock session, stay around for about 5 more minutes because we're going to cover some important details. But for now, we're going to say thank you to Sagar. Yeah. And where can people find you? Shall we link to your LinkedIn?
Yeah, I mean, you can do my LinkedIn. I just popped my email at the bottom of the chat. If anyone wants to reach out, if anyone wants to continue the discussion, or there was something they didn't get a chance to, I'm really happy to set up time. But yeah, thank you all.
Really, thank you so much. I think we could have kept your session going for several hours. You have a wealth of knowledge and experience, so appreciate it.
Amazing. Bye, guys.
Great, thank you. Bye.
I'm just going to stop recording.
Stop the recording.